If you have to be successful, you have to first save at the top.
You're saying to me that your surplus is this, but your bank balance and your assets do not show that.
Absolutely. I don't believe in long-term relationship. We believe in lifetime relationship.
I'm not an animal trying or a monster trying to make sure you're not having a good time and a good life.
Yes, you haven't made a mistake, but you haven't done the right thing. Even the largest company in the world cannot specialize in everything.
Make a couple right cuts, but just have the best time.
Yeah. They're scared to follow a discipline.
They're very, very hesitant because they're scared. They don't want to be told that what they're doing is wrong.
But don't expect overnight results.
Hello and welcome. This is the Financial Freedom Podcast. I'm your host, Max Gerstein, a fully qualified UK advisor out here in the United Arab Emirates. With me today is a very important figure in the UAE. I've got the pleasure of introducing Ashok. Ashok is the Managing Director of the Continental Group, but I'll let him do his own introduction there.
Thank you, Max. Well, my name is Ashok Sardana. I came to Dubai in 1977, and the first 17 years I worked with AIG Alico, and 1994 we set up Continental. I'm the founder and married, one son, 3 grandsons, and a small family. I hope that introduction is enough.
Yeah, no, that was a great introduction. And do you want to explain maybe a little bit more about Continental and kind of how that fits in and where then your experiences are?
I worked with AIG for 17 years, Alico, and every time I went to a client, there was always a requirement for something which Alico could not fulfill, and my dream was to offer the best solutions to our clients, and that is where the idea of forming a insurance broking company was born, because there we could offer a wide bouquet of solutions to our clients, the best solution, and I was not worried about the competition because I was offering the best solution to my clients. That's how we started with a small office near the Al Maktoum Bridge. Today we have offices in Dubai, Abu Dhabi, DIFC, Geneva, Hong Kong, and Mauritius.
Wow. So really took off and very, very successful then from that.
It took me 30 years to become an overnight success.
I think that's also, quite a good analogy for just investing in general, right? You start small, it builds and builds and builds, and when it gets to a certain size, it's then a lot easier to kind of carry on that journey and be sustainable. I thought Ashok would be a real good value in this podcast just because of his experience there. Again, he worked at a different place. He worked at IAG, and there it's a lot of off-the-shelf things. You don't have everything available to you. And I think what's really, really nice about independent advice is that you can go anywhere, take the best things from each place, which is then tailored for your client. Now, the Financial Freedom Podcast is really about trying to make advice with a bit of a less of a stigma towards, it's only for the wealthy, it's only for the super successful. Pretty much every expat in the UAE needs some sort of advice and financial help. Do you agree?
Absolutely.
Perfect.
Yeah.
So the idea is really to spread that word, to make it more attainable, to get more people reaching out and thinking, you know what, that's actually something which I need, that's somewhere I can reach out to help. Because also I think a lot of people need help, don't know where to look, don't know how to reach out, think that they're not viable for that, and then they'll get turned away. Okay, so I know it's a long journey. I know 17 years with AIG, 30 years obviously with Continental, but can you share with me your journey of how you became successful in this industry, some of what sets you apart maybe from others? So can you share your journey, how you became successful?
When I was with AIG, we had one solution to offer. And I believe every company has some solutions where they specialize in. Even the largest company in the world cannot specialize in everything. So this way I was able to offer the best solutions to my client. And this is the ethos that we follow today. Because we offer so many solutions, see what the client requires. Sometimes he may not require my services today, maybe after 1 year, 2 years, 5 years, we don't know. But what's the best solutions I can offer to him? Build a relationship so I can offer ongoing solutions. As his needs keep on changing, we keep on offering him different solutions. One thing which I have learned from a friend of mine, at Continental, we don't believe in long-term solutions. We don't believe in long-term relationship. Every time we go to a client and everyone says, this is not transactional relationship. We believe in long-term relationship. And I tell my clients, I don't believe in long-term relationship. We believe in lifetime relationship.
I was seeing where you're going with that.
Yeah. Are you married, Max?
No.
No, okay. When I got married, I didn't tell my priest that I'm going to have a long-term relationship with my wife. It was a lifetime relationship.
No, I completely agree. And what I actually really, really like about what you said previously is something I want, I'm trying to do with my own client base there, is that it's not about trying to find something that doesn't necessarily fit right now, but you just want to give it to them anyway. It's about going, look, let's get you to the position where I can actually give something that's going to add real value to you, which is going to help transform you. And I think that's definitely a big difference in, who I seen advisors don't last very long in the industry, and advisors who do, is that they take the extra time out. They are much more patient with it so that they can give you what's the right advice, because that then builds the lifetime relationship, because then all the clients go, you know what? He didn't try to rush into things.
Exactly.
He set me up in the right way. I'm happy being here. Right. So that's, I think, how you
we should not be in a rush to offer something to our client. Understand what he requires, and one day he'll come back. If you continue to service him, if you continue to stay in touch with the client, and if you have given him the right advice, he'll always come back to you.
So that's how you've built yourself and built your company. Really, really good. I like that. And so what were some pivotal moments in your career? Obviously, you've took a lot of risk leaving AIG, creating Continental, right? I like risk. I don't really like the word risk, but I like risk. Obviously, you need to take risk in portfolios so that clients can actually make money. It's, the same as how we approach life. You sometimes need to take risks so you can get the rewards, right? So what will you say some pivotal moments when you were kind of umming and ahhing about jumping? And
I think it's the faith that you have in yourself. When I left Alico, I was the agency manager. And in 1994, no one leaves Alico as an agency manager because you're at the helm. And I had a very successful agency. And people thought I was crazy. Why would you do that and start something? Hindsight, I made the right decision, and then many people followed. Many people started their own broking. So I can say I was one of the pioneers, and I look back at the journey and I made the right decision.
Perfect. So again, you did through by having faith in your own ability, through understanding, what is needed, right, in the market as well. And again, that's through a lot of research, a lot of experience, which again, I think is invaluable. I think when we're looking at people trying to do DIY investing, right, you built that up over 17 years and built something quite successful.
Yeah, it took a long time, a lot of experience. We made many mistakes, but those mistakes were because we didn't understand few things. We were always client-centric. So yeah, we made a lot of mistakes, but we're learning.
Perfect. So then kind of adding on to that and kind of building to that, why do you think that some people, or kind of a lot maybe in the UAE, hesitant to ask for financial advice?
I think they're scared. They're scared to take a decision. If I go there and they're scared to follow a discipline.
Yeah.
That is... We don't take some decisions because if I don't take it, okay, fine, I haven't made a mistake. So if you don't do it, yes, you haven't made a mistake, but you haven't done the right thing. And I think my mentor, I use this with my clients I follow. There are two kinds of people. The first group, they spend first and then they save. The second group, they save first and then they spend. If you have to be successful, you have to first save at the top and then spend. If your salary is 10,000 dirhams, you can live in 9,500. If your salary is 5,000 dirhams, you can live in 4,700. If your salary is 2,000 dirhams, you can live in 1950. But we have to have the discipline of first saving at the top. If I can help my clients, irrespective whether they are CEOs of the companies or a junior executive, we have to teach them the discipline of saving money first. Investments and everything comes later.
100%.
Once you save money, you have a decent bank balance that propels you to save money because you have the confidence and you feel good about the results.
I think that's completely hitting the nail on the head there. I think they're very, very hesitant because of that, because they're scared, and also because they don't want to be told that what they're doing is wrong as well, right? When you're looking at a car and you're like, what's happened here, right? They don't want to be told that, okay, you're earning this amount, how you don't know, you're saying to me that your surplus is this, but your bank balance and your assets do not show that.
Absolutely.
So there's something very, very, very wrong here.
They are scared to look at the result. They're scared to look at it.
Yeah, I think, that's definitely probably one of the main reasons. But then, from that perspective, how do you think, advisors can make their services more approachable from that perspective? If they're terrified, if they're scared of going to see us because they don't want to be told what they're doing is wrong and they're going to need to change their lifestyle, how can we maybe get the message out there that yes, but also if you do so, you'll actually be so much better, right?
What's good for, I was asking a friend of mine, what's good for life? What's good for health? And all, he said, exercise. So I said, do you exercise? And he says, no, Ashok, I don't have the time. So I said, oh, you mean to say you want to die early because you don't have the time? We have to, first of all, when I go to the client, he should have the confidence that I'm here to help him out. When you go to a doctor, I'm scared to go to a doctor because he will tell me something which I don't want to hear.
Yeah.
But I still have to go to the doctor because he can give me the right advice. Similarly, our clients, our friends, people who want to set some financial goals, they have to come and talk to a financial advisor, a proper financial advisor. You don't try and do an open heart surgery by going to the internet. Yeah, you can go through it, but you can't do that. Similarly, yeah, you can do your research on the internet, but you have to talk to someone who will put you on the right track. And that's why they need our help to guide them for the future, to help them to save for the future.
Yeah. And I think, would you say that if you were to look at the role of a financial advisor, how would you split that role up? Would you say it's 20% investing, 30%, 40% investing? Because I think a lot of the time when people come to see me, right, and I do a lot of work trying to not have my whole mantra about investing, right? But when a lot of people come to see me, it's always like, oh yeah, no, I want to invest, I want to do that. But you look at them saying, that's definitely not what you need right now, right? Why do you think people view as financial advice as only investing? Is it just the education, or what needs to change so that they actually come to us because they say, look, I've got a real problem here, it needs sorting out before I can get to the stage of investing? And I think part of why people don't do that is because maybe that the industry has a certain stigma to say they'll only take you if you've got loads and loads of money, that you're not worth their time.
I think that's the unfortunate part. Yeah, I want to get a client who will give me a couple of $1 million. If someone says, I want to give you $10,000, I don't want to spend time with him. But somehow they have to start somewhere, and I have to guide them. I don't have to put them in sophisticated investments. When they start, they can start small. They can start with the basic. I think there are only 3 ways of invest in the financial planning: banking, insurance, and investments. You have to have your banking. You have to have your bank account. You have to have your savings, and then you have investments. You can have mutual funds. You can have you can trade in derivatives or oil and futures, etc. That's more sophisticated. But you have to start somewhere small. Start with the basic savings, start with mutual funds, and then get into more sophisticated. As you build your portfolio, as you grow your asset base, you can start diversifying.
Yeah. And I agree there. And, I think what people miss out on is also the bigger picture. The bigger picture is, if I take on a 24-year-old client, right, in the UAE, working for a large company, but it isn't paid too well right now, let's say they only have $200, $300 to spare, right? I think a lot of people would go, oh, I'm going to turn this guy away. Whereas, I've quite lucky in the fact that I've got quite a lot of clients. They've been with us for 20, 25 years as Skybound. And so, I've spoken to a few and said, 20 years ago when I joined, I was on $200. But obviously, as you get older, you get promotions, you do this, you move to different places, your pay increases, hopefully, right? And the person who took the jump and said, this won't make me any money in the short term, but I'm going to sort your finances right. Now I'm on 10x what I was on before, and now I've got a couple mil under management there. That's really the journey and what we're trying to achieve with everyone, right? So again, don't be turned away at the start if someone is low, because you don't know where they're going to be in the future.
Absolutely.
And if you follow the right advice, then they'll do a lot better. They'll learn more, which means you earn more. But also, they'll introduce you to other people, right? And that's the way businesses grow.
Absolutely.
Is on introductions and is on referrals. And so, rounding this part up on kind of the stigma, what message do you have for people who think financial planning is just for the wealthy?
No. I think financial planning is for everyone. Like you said, $200 per month. I'll give you this analogy. When you go to a gym, you don't start lifting heavy weights. You start lifting with maybe 10 pounds and 15 pounds. And as you go along, you become stronger and you start lifting higher weights and you become more proficient in the gym. And same thing is with saving. Start with $100, $200. I don't care. And as your clients grow, you will grow with them because they've started saving $200. I'll give you my example. With Alico, I used to contribute $200 per month, and this was taken out before my commissions. So I never saw that money. I started with $200 per month, then it became $250, $300. By the time I left Alico, I was contributing $8,000 per month. And that paid for, it gave only 3% interest. It doesn't matter, but I was able to save that money. So similarly, we have to give the confidence to our clients. Start saving somewhere. Oh, I can't save $1,000. Doesn't matter. Start with $200 and we'll get you to $1,000. But start somewhere.
Yeah. Because obviously, if you start early and you start working with someone early, you can.
Absolutely,
It's
yeah.
our job to find the little sweet spots and go,
Yeah,
look,
yeah.
this is your expenditure.
Yeah.
This is your plan for the future. It's up to me to go. Maybe you cut a little bit on this so that you have a little bit extra there in the saving, and we work and you get more comfortable with that. And then you realize, I'm not an animal trying or a monster trying to make sure you're not having a good time and a good life.
Yeah, yeah.
I will still try and give you that. But what's more important for me really is the long-term picture of at one point in time, you need to stop working.
Yeah.
Do you want to have a good life now and then an absolute horrible one when you can't work?
Yeah.
Or do you want to make a couple cuts,
Yeah.
but just have the best time,
Yeah.
when it's looking to the future?
You can either have a short-term pain and long-term benefits, or you can have short-term benefits and long-term pain.
Yeah.
So the decision is yours. Have that short-term pain of not seeing that $200 per month. It'll help you in the future.
Yeah.
Yeah.
And you can obviously then tie that to the gym analogy as
Oh,
well,
absolutely,
which
yeah.
I really like, and I might steal that from you, Ashok, in the future, because it just conveys
As long
the
as you
message.
give me the royalty, I'll.
Yeah, no, I'll say that. Whenever I speak to a client, I'll say, this is trademarked Ashok. And then I think going then back to trying to communicate then with people who may not necessarily have approached us before, how would you then describe your style of financial advising to them or to the listeners?
Couple of things which I do, I'm talking about. When I go to a client and I tell my clients, Mr. Prospect, you should buy this policy or you should do this for your family because this is what I have done for my family and I'll send you a copy of my policy. So I'm not trying to give you something which I don't believe in. I save money first and then I spend. If I'm offering you a solution, I want to make sure that it's good for my family. I tell my clients, I'll send you a copy of my policy document to tell you that how much I believe in it. So it's your belief and I think all we have is trust. Once violated, we have nothing. We have to tell our clients and our clients have to trust us. It's the recommendations that your clients will give to their friends. Talk to him because he's the right person. Talk to him because I've dealt with him and he offered me the right solution.
And so do you think that really helps you when you speak to someone who has maybe had a bad experience, lost trust in the industry and financial advisors, and you sit there and go, I've actually got this myself. I believe in this. I've given it to my family.
Yeah.
Where do you sit now? Can you say to me,
look, I try and do the best to my ability and I'm trying to help the client. Some people still don't want to do business with me. That's fine. Yeah. But there are people who, and also because I've been in this profession for a very long time, probably it becomes a little easier and my white hair also helps. You should dye your hair white.
Yeah, I think I'd look good as well.
Yeah.
Yeah, they can definitely obviously the experience and everything, which then definitely helps. And so, what are then some practical steps that people can do to improve, their financial health right off the bat?
Just save first, then spend. Don't be in a rush.
Yeah.
Take time, think about it.
Do you think people are in a rush at the moment?
People are in a rush. They want returns. How much returns can you give me? 20%. How can I give you 20%? I don't know what's going to happen with the oil prices. I don't know what's going to happen with the US stock market or with the US elections. Stay invested for a longer period. Have faith in the investments. It'll give you results. But don't expect overnight results. And don't blame the advisor if the US market goes down. It's not in my hands. I went to a client of mine and he said, Ashok, the price of oil, there was a time when the price of oil had fallen down to about $12 a barrel, about 10, 15, 20 years ago for a short while. And I said, when you got married, did you tell your wife that I will provide security only if the price of oil is above $50 a barrel? What does price of oil got to do with your savings and what does price of oil got to do with providing security to your family?
I really like that. Because I manage a lot of the existing clients across Skybound, just over kind of 500. And so, a lot of them have been through 2008, they've been through 2020, 2022, right? And it's always like, the returns. And I think, one of the things I say to clients now is, one, my job is not to get you the highest returns. It's just not. My job is to get you to where you need to be.
Absolutely.
With the least amount of risk that I can give. If you're getting 20, 30% elsewhere, fantastic. I'm very, very happy for you. Let me go slowly and just meander on and get you to where, because That's all I care about. I just care about getting you to the journey. And if the market's full, is out of my hands. But what we can do certain things when markets do fall, so that again, it's protecting us and we're taking advantage of the fact that markets have fallen and you're incorporating different things.
Some advisors will tell you, give me an apple and I'll give you an orchard back and you'll be lucky to get the seeds back.
Yeah, yeah,
Stay invested, stay calm, don't panic. The problem is people panic.
they do.
And then they sell at the bottom and they say, I lost money.
So how do you get the message across? Because it's very, very difficult. We're both in finance. We both have our own investments. And when the market falls 35% like it did back in 2022, you're looking at your own investments and going, whew.
Stay in touch with the clients, because when the clients call you and you don't pick up the phone, they think something is wrong. But if you call them, they need assurance. Actually, they know it's not your fault. If the war happened, you had nothing to do with it.
Yeah.
But they want the reassurance, no problem. This will also pass. Every time there's a huge correction and everyone says, no, this time is different.
Yeah.
No, this time, when 2008 happened, no, this time is different. When the AIG was collapsing and the Merrill Lynch closed down, no, this time is different. It's all the same. The market comes back and we have seen it. The market has fallen down, has come back again to the higher levels than before.
That kind of brings me to a quote I saw. And again, it was on a podcast and it was actually a bunch of celebrities all sitting around. And I think, what's his name? The guy who played Forrest Gump.
Tom Hanks.
Tom Hanks, yeah. And he said one quote that really, really helped him through difficulties and financial stresses was, this too shall pass.
This too shall pass,
right? And I think that's very, very important, obviously, when it comes to finances. But it's all about the advisor and also, I think, the industry and how we get across ourselves that falls in the markets always happen. Markets then always come back up. This is more of an advantage than it is a disadvantage. And so I think it's definitely the advisor's fault on maybe not being, as you said, to the communication they have with the clients, and also the education.
Education, communication, and holding their hand and giving them the reassurance.
And so what do you think is the best way, I suppose, people can seek financial help, right? If I was in a rut, had a bit of debt and I just didn't know what to do, who to turn to, and I was typing in the internet and that wasn't helping, invest in Bitcoin, right? How would you approach that?
I would say go and ask someone for an introduction to the right financial advisors. Let that be the first step. A good financial advisor will help you to manage your finances. Consolidate, keep all the records, know where your money is invested, manage it. And you have to go to a doctor. If there's a problem, you go to a doctor. If you have a problem, you go to a chartered accountant. You don't try and do it yourself. You are experienced. You have 20 years of experience. Let these people come and learn from your 20 years experience.
I completely agree there. Definitely on the doctor side as well. Whenever we've got something a little bit wrong with us, straight to the doctor.
Straight to the doctor.
What's going on? We're going to cut it before it gets too bad, right? If I've got a little cough, I'm straight to the doctors because I don't want it to progress into something worse. Why don't we do that with our finances? Why do you think when we start racking up the credit card a little bit too much, when our surplus starts to disappear, when we start spending too much, and when we realize we're not saving, why don't we at that point go, right, I need to go to see a professional?
Absolutely. Have you ever seen the credit card ads?
Yeah, crazy.
I receive calls today. Do you want to take installment? They want you to spend money. You see the ads on Sheikh Zayed Road? Darling, look how much I saved. I spent 10,000 dirhams and I saved this money. You spent 10,000 dirhams when you didn't need to buy that stuff. People want you to spend. Don't spend, first save. Set your financial house in order before you go out. Seek financial advice. That's most important. If you want to be successful and you want to save for the long term, you need financial advice.
So you would say I think everyone needs the guidance.
Don't do it yourself. You're an expert. You're not an expert. You're an expert in your profession. Let the other professional handle.
Why do you think it is that people don't care as much about their own finances until it gets too bad? Whereas, if we look at a company, and I know you work for a company, you care about the profit, you care about the loss, you care about the structure, you care about the people that work there. You think it's bad if someone is, shaming the company and is not being efficient. But why don't we approach our own finances with that same mentality?
We have to start with our own house first.
But people don't, right?
People don't, Unfortunately, probably this is I hope our message, we can convey this message to more people, to a bigger audience. Let them seek financial advice. Let them find financial advisors who can help them in setting the financial home in order.
So then your first step would be when it comes to looking and assessing your own financial future would be, don't try to DIY it. Don't try and do it yourself. Go speak to a professional.
And accept that I'm in a mess.
Yeah.
If you don't accept it, probably you will not go to a financial advisor.
The first step in understanding your issue is to actually recognize that you have an issue in the first place.
Look at the mirror in the morning and say that, yeah, I need financial help.
Yeah, I think that's very strong.
Yeah.
And so now you keep saying, obviously, save first, then spend, right? Now, on sort of that topic, what would you say, what's the difference between saving and investing? Because lots of people save and they think it's a little bit like in investing, they're getting 0.5% in the bank.
We have to, at some stage, we have to get into investments, because if I keep the money in the bank at 3%, 4%, the inflation is going to erode everything.
Yeah.
So at some stage, once I have built a basic bank balance with my emergency funds and others, I have to start investing. I may start with mutual funds. I may start with not expecting high returns. And then at some stage, I can have this 5%, 10% play money, which I can invest in Bitcoins if I want, or I want to buy oil futures or whatever. So I can allocate that 5%, 10% as play money. If I make money, fine. If I don't make money, that's okay. But we have to start somewhere.
So then if you were to see a client, for example, who didn't have what you would call an emergency buffer, so I think first for the listeners and the watchers, establish what is an emergency buffer. How would you help them build towards that emergency buffer? Would you help them with budgeting? Would you create an Excel? What would your steps be in that first instance?
Yeah, I think the first step would be to budget and create 6 months of your income as an emergency buffer, which is in a bank account, which is easily accessible, and probably some amount, not a big amount, should be left in cash at home. But 6 months of your income should be kept aside as an emergency fund. What if you lose your job? What if you fall sick? Or what if there's an emergency somewhere else? At least you have the cash to manage that. And then we can start talking about investment and savings, etc. Yeah.
So you think before anything else is done, before you start splurging on holidays and going enjoying yourself and enjoying Dubai, it doesn't have to be Dubai, right? We both work on the international basis, but establishing that emergency fund should be life number one prerogative.
Absolutely.
Why do you think people, because this isn't, I don't believe this is knowledge that nobody knows, right?
I think everyone knows. Everyone knows that I must have some money. And during our lives, we've had some emergencies. Keep that fund, be safe. I will not leave the house till I find, do I have a spare tire? That's my emergency. In case I have a flat, I have a spare tire. Similarly, I have to have some funds. They may start with 3 months, 4 months, 5 months, build it up. Yeah.
So then your advice is get 6 months in savings, and then after that's done, then you can then start to go, okay.
Yeah.
Okay, perfect. And then this is part of a 2-part question. So why does not everyone have like an Excel spreadsheet where they budget? Why does not everyone actually understand what's going out, and why is it actually important to do so then you can achieve that buffer?
I think you'll have to ask this question from a psychologist, why people do it. I know people don't do it, and I keep on educating, I keep on telling them, I keep on having a conversation with them. It's your money, keep it aside. It gives you, even if you want to keep it under your pillow, doesn't matter. Just have some money saved.
Do you think from a psychological aspect, right? I know you're not a psychologist, right? But, for me, if I understand what's coming in and what's going out, and what my position's going to be at the end of the month, I feel empowered, I feel confident, and I'm not stressed, and I can sleep at night. If I don't know what my position potentially is going to be next month, if I'm going to have money there, I can't do that. For me, it's irresponsible, and I try to obviously educate clients and say, as you said, you wouldn't leave the house and go in your car if you didn't have insurance, right? It's prerogative that you have car insurance, because something goes wrong, you need something there to cover yourself. Why don't you do the same with your investing? Where do you think that comes from? Do you think it comes from the lifestyle in Dubai, or? It's
the lifestyle in Dubai, and people are living for the moment. We don't understand the kind of emergency, something which we don't foresee, and we have to build that safety net. You've seen these circus, they walk on the tightrope. They have a net underneath. I have to build that net. I have to build that safety net. Yeah. And it's my commitment to my family. You have a family, you have wife, your children, your parents, I have a commitment to them. I have to make sure that I'm providing. Saving is a provision I'm making for my family, for my children, for their future, for my future. If my parents are dependent on me, I have to make sure that I have made some provisions. But unfortunately, we're too happy to go to the pub. Yeah, savings can happen tomorrow.
So let's role play for a sec. So if I was meeting you for the first time and I was a mess, right? And the first thing I needed to do was budget, start building my buffer. But, I was too enraptured by the lifestyle in Dubai. I wanted to make sure I was having fun, that, my partner could go to all these nice places, do her hair, what would you say to me?
Do you want me to be polite or do you want me to be honest?
I mean, I'm already scared about what the answer is going to be there, but, be honest.
Save first. Go and tell your employer not to give you that 2,000 dirhams. Put it in that saving. Put it in that bank account. That's the honest truth. That's the brutal truth. And that is what you have to do. You don't want to do it. You go to a doctor. The doctor prescribes you a medicine. You don't want to have a medicine. That's your choice. I am telling you to do this first for your future. Go through this pain for a short while for a brighter future. Don't sacrifice your future for this short gain of going to a pub or spending that money.
Yeah. And again, using the doctor there because you don't necessarily want to take the medicine, but it's going to make you feel better.
Yeah.
Right. Same kind of in golf, right? Sometimes, I don't know if you play golf, but
no, I don't. Fortunately.
Well, yeah, I think, we have a term in golf is take your medicine, right? If you did a bad shot and you're off in the side and there's loads of trees in your way, you can either try and wing it to maybe hopefully get somewhere good, or you just go, you know what, I'm going to play it safe, off to the side. I'll take my medicine to set myself better up.
Yeah.
Right. Okay, perfect. And then, so in terms of, I suppose, real life examples and advice, right? So can you share maybe a success story of where simple changes made a big difference with one of your clients?
In my life?
Maybe it could be your life, could be maybe with one of your clients, how you've, tweaked something little, which is then cascaded into, really, really helping them.
I read regularly, and every time I read a book, I take 1 point, 2 points, and I make a minor change in my life, minor change in the way I work, in the way I behave, in the way I think. And over the years, over the last 10, 15 years, I have changed my style of working, my lifestyle. Similarly, for our clients, it has to be those baby steps that we have to help our clients to take the baby steps. Whether it is insurance, I work with high net worth individuals on high value life insurance. But these are the baby steps that we have to. Ashok, I can't afford to invest $10,000. Okay, how do you know you can't afford? He told you he can't afford to save $10,000. Let's start with $1,000. I'm not going anywhere. You're not going anywhere. We'll build it up. There's no rush. But we have to take those baby steps in educating our clients, giving them the confidence that, do it slowly, but start somewhere.
And then them getting into that routine, starting to save small, gradually building up, gradually make them more comfortable.
More comfortable.
That's now.
They start trusting you. A client of mine, this was in medical insurance. I told him to buy a policy. He had a policy excluding USA. This has nothing to do with investments, but and he says, no, Ashok, including USA is too expensive. I won't take it. Unfortunately, his wife fell sick, and he had no choice but to take her to the US. The treatment was available in the US. He had to spend probably $1 million to take his wife. He could afford it. It's not that he couldn't afford it. But he came back to me and said, Ashok, I wish I'd listened to your advice. When I ask someone to do something, it's your personal belief in it. I'm asking you to do this thing because I believe that this is the right solution for you. Whether it is investments or insurance or any other advice I can give him, not necessarily financial services. If I'm recommending someone, I'm recommending this person because I believe he can solve your problem.
So then what do you think then are the common mistakes, that and kind of how they can be avoided? I know that's a very, very long list. Obviously, you listed one just there, which is, you are very experienced advisor, lots of clients, what works and what doesn't, where you should cut corners, you shouldn't cut corners, but, where it's safer to potentially cut corners, as in starting small with investing. When it comes to insurance, you don't cut corners, right? I think, that's definitely a message that got across there. But what do you think are the most common mistakes that you see? And, when you drill it home to a client, look, it's very, very easy to avoid it, but...
Impatience. People are impatient.
I was hoping you'd say that one.
They want the results tomorrow, the next day, yesterday. That's not going to happen.
So I think one of the issues around how I think Bitcoin Bitcoin and other cryptocurrencies created is that people think that they can invest today and tomorrow they can make 20%, 30%. In a year they can make 200, 300.
Maybe they can, I don't know. But that's the risk that they're taking. If they have $10,000 or $100,000 and they want to invest the entire 100% in Bitcoin, that's foolish. Yeah, they may be lucky enough and it goes up by 200%. Yes, they made money. What if it does not? So I would only invest that 5-10% in the speculative market and all, but I'll go slow.
And I think
don't be in a rush. Yeah.
And I think that's one of the biggest values of a financial advisor is that hand-holding. It's that controlling behavior.
Absolutely.
To go, I understand that you want to do this,
Yeah.
right? But let me, for the majority, take care of everything, make sure that it's slow and steady and good.
Yeah.
If you want to play around with 1 to 10%,
that's fine.
be my guest, but just accept the fact that this is either going to be a make or break decision for that 0 to 10%. And then, I think what's nice as well over kind of your 47-year kind of experience in the industry, what sets apart maybe some of the attitudes or behaviors that your kind of more successful clients have as opposed to the less successful ones? Now, I don't mean that in terms of how much money they earn. I mean that more in terms of, I've got some clients who don't earn that much, but actually in terms of how much they've built up over the time because they practice good things, they actually are a lot wealthier than the clients who don't earn as much. So, posing that question to you again, what attitudes and behaviors do people have and how can maybe people copy that to try and reenact it?
Yeah, the problem out here is we want to copy the Joneses. And by the time you reach their level, they have moved out and again, you're trying to do that. I think we have to stay content. We have to feel proud of what we have done. We have to feel satisfied. Satisfied not in the sense that, okay, I shouldn't have aspirations of building bigger business or building, saving more money, which is fine. There's nothing wrong in becoming rich, extremely wealthy. But the values that we build in our family, in our children, in our culture, in our organization, I think that's the legacy that we have to leave behind. And that's important. Making money is important. We should make money. But am I taking care of myself and my family as a whole person? Am I looking after other aspects of life also? And am I spending time with my friends? Am I spending time with my family? Am I becoming a better person?
And then do you think that people who have or focus on that side of things, without obviously forgetting the other side, do you think that organization to juggle kind of both of them and place importance? And does that play a part to how organized they are maybe on their finances and how they're willing to follow advice better? Or
you cannot be financially insecure. If you're financially insecure, you will not be able to enjoy time with your family. You will not be able to go on a vacation. You can't enjoy going on a vacation on borrowed money, on the credit card which is charging you 24% return, 24% in interest, and they want you to buy the ticket today, pay later, enjoy your holiday, and when you come back, you're broke. That's not the right way of doing it. Spend wisely, have your finances right. That's extremely important. Get someone, surround yourself with competent people, and financial advisor has to be part of that circle.
So then, going back to a very, very, I suppose, famous quote, right, is that, you are the value of your top 5, right, of your circle,
yeah.
right? And so I think, again, what happens, and, again, please say if you've experienced this as well, but, you should really try and network as much as you can to then build a circle where you're like, these people are constantly focused on their security and building themselves up and expanding. They're not, I suppose, satisfied with spending, lots of money going out on all these branches and doing things which aren't adding value. When you start dealing with people who are trying to always add value to what they're doing, then you yourself then kind of get caught up in it.
Yeah, don't try and copy your friends. You don't know what's going on in their lives. Surround yourself with the right people. Don't surround yourself with toxic people. Don't surround yourself with negative people who give negativity. Stay away from them. But build your circle of friends who can add value, where I can learn something from them, where they can contribute and I can contribute.
If you're the smartest person in the room, you're in the wrong room.
You're in the wrong room, yeah.
Perfect.
I don't want to be the smartest person in this room, of course.
And then what advice would you give to someone then maybe who is overwhelmed by their finances? So like it's all a mess and they just don't know really what to do.
I think first step would be acceptance. When you go to Alcoholic Anonymous, the first thing that they say is that you have to accept that you have a problem. If you don't accept you have a problem, you'll never be able to go and improve, because first step is acceptance. And if I don't understand finances, that's fine. I can seek help. There's nothing wrong in going to a person and asking for help.
I agree. I was actually speaking to a new client this
Yeah.
week, and she came to me and said, "Look, I'm reaching 50. I haven't done anything. I've been out in the Middle East for over 20 years. I haven't saved. I've now got this little panic attack that by 65, when I stop working, I don't know what to do, right?" And when those types of people obviously come to you, it's generally the easiest because they've actually had this epiphany moment where know that they need to take things seriously and need to do it. I just wish it was when you first move into work and you're out here, you don't earn a pension, you don't do any of that they go, right, I'm fresh out of school, I've now got a job, what can I do to make sure that my future is solid? But people don't have that attitude, right?
People don't have that, but at least, as they say, better late than never. But at least this lady has come to you at 50. Let's do our best to guide her through this period. If she didn't come now and came 5 years later, she would have been a bigger mess.
Yeah.
Yeah.
So then adding on to that, then why is it important, obviously, for people to start saving or take consideration, retirement early? A 21-year-old is never going to think, oh, you know what, I need to save for retirement. I'm going to use my first paycheck, my first bonus to put away and invest for my future. How do you think we can educate people?
First of all, retirement is a very interesting subject for me, which I'll discuss with you in a moment, if we have the time. Yeah, a 21-year-old person whom you're telling to retire at the age of 65, he cannot visualize 40 years from now. So the objective is give him short-term 5-year saving objective. Let's in the 5 years, let's save X amount. And after 5 years, roll that money for a longer period. If you tell a 21-year-old that I'm going to start a plan for 40 years, he may start, but he cannot visualize 65 at retirement. Yeah. And why retire?
True.
Why retire? I think the concept of let's save for your retirement, it should be let's save for your future.
Because then obviously if you save for your future, you then have whatever you need at that point in time to go, right, if I do want to slow down, I can. If I do want to, your options open up. If you save maybe, as you said, like a 40-year plan to 65, you may want to stop contributing in 20 years because you've actually gotten to the point where you can slow down, you can do what you want. And then therefore it wasn't a good advice for that because
I helped you to save money for 20 years. If I didn't help you to save money, you won't even have that money. So we have to educate our clients, save money, not for retirement, because I don't think they can. I don't think at 21 I knew what retirement was. And even I don't know even today what retirement is.
And what financial habits do you think then everyone should adopt? No matter if you're wealthy, no matter if you're not doing too well, what habits do you think can add a value to everyone?
Save first, then spend. That's the first habit. Don't be greedy. Invest for a long-term basis.
And so with your wealthiest clients, right, they adhere, because I know this is your favorite phrase, right? Save first, then spend. So all of them, right, is something you drilled into them, and that's how they've
Some
helped
of my
get to that
wealthiest
stage.
clients, they don't need to, they're wealthy now because they had saved earlier. So they built their portfolio, they built their savings, and now they're wealthy.
Yeah.
So they got into the habit or they built a portfolio. And when I do go to my clients, I'm not asking them for a budget because their income is exorbitant. They're extremely wealthy. So I don't ask them, what's your budget for household and expenses, etc., because their income is substantially high. But yeah, they still have to follow some advice. They have to still follow the basics. The basics don't change. Whether you're a millionaire or a new executive, the basics remain the same. You have to make prudent decisions on your investments. You have to keep aside some money for emergency. Now, instead of 6 months, he may keep aside money for a much bigger amount for emergency, but they still have to do that.
So again, starting from the bottom up then, how do you help people then increase their wealth? What are the building blocks towards that?
Talk to a financial advisor, find a financial advisor, let him help you, let him draw a 10-year, 15-year, 25-year plan. Follow that plan. Write down your 90 days goal. That's extremely important. Sometimes we write a 1-year goal, but those 1-year goals have to be monitored on a quarterly basis, monthly basis. Am I on track?
I think that's a really, really important subject. And I think that's definitely something which, again, does set aside, let's say, the more successful than the not so is, keeping something to every 90 days and visualizing that goal is a lot easier than one or two. I know I'm on track a lot easier if I'm revisiting it, right?
Yeah.
So, when you sit with a new client, you're trying to build towards that goal, you say, right, this is how I want things to develop over the 90. This is your 90 day.
Yeah.
This is your 180. This is your 270,
So,
right? This is
so
your
if we
360.
review the objectives on every 90-day period, he knows, is he on track? Once he sets on track, then I think it'll become a habit for him to manage his finances on a regular basis.
So I think we can then both agree on the fact that I think everyone should, whether they keep it in a journal, have it as a note on their computer,
Absolutely, yeah.
say, this is going to be my 90-day goal, is
Yeah.
to save X amount or
Yeah.
to reduce my spending by X amount, whatever it
Yeah.
is. Just make sure that you're holding yourself accountable for something.
Absolutely, yeah.
And that will help build good habits.
Yeah, yeah.
Then you start to see the success of how that savings
yeah,
affected
yeah,
things. And it kind of gets you motivated, wouldn't you say?
Absolutely, yeah.
For doing it for more. Perfect. And then, you say, look, you read books every morning and, it's really important. Obviously, Warren Buffett, he reads for 5 hours all the newspapers in the morning, right?
Yeah.
Constantly learning. Why do you think it's so important that people keep learning about finances, whether they don't know anything about finances, but, why do you think it's important for everyone to educate themselves when you've got someone like us who can, try and do it for them?
No, if I read, then I can have an educated conversation with you. But reading is important because it gives us knowledge not only in finances, in different areas. That helps us in our personal development.
And then the more, obviously, I think you feel yourself improving there kind of personally, I think that all then feeds back into having a well-structured finance.
Yeah.
And then, what final advice then would you give listeners who are kind of just starting on their journey to financial freedom and just not sure where to go or what to do?
I think the first thing would be to accept that I need financial advice. Find a good financial advisor. Listen to him and follow his advice.
I think then in kind of summary of everything, and I think what was really, really important there is that even though I asked you a lot of questions, generally the answers were all quite similar, right? Which was everyone needs help, right? Doesn't matter where you are, we all need help. We all need a doctor, right? And you should treat your finances like your own personal health.
Absolutely,
right? And by having someone to guide you, it just makes it so much easier. By having someone there who can help direct you, can help mentor you, and take away a lot of the stress for you, I think you then fall into this pattern of practicing good habits and doing things which you weren't necessarily before. And I hope that this has really gotten across that we're not scary, right? I think, both of us have very, very bluntly said, look, we're more than happy to help you with that journey, whether, you can invest now or not, is not really of a matter to me, right? I got into this industry, to help people. I've seen what happens when people don't have good advice, and to set people on the right journey, to see how people evolve over time and reach their own milestones, I think is the most important part of a financial advisor. And, it does make us money in the long run, right? Going back to that fact, obviously, it is all about, we are trying to earn money, trying to earn a living. And if I can help you in the best way, and if you can help clients tailor the right solutions, have this really, really wide range, which is why you set up Continental, that all just helps us, I think further on. So I think the most important message, I think, to everyone there is don't feel intimidated by going and seeking help. You seek help because you got a cold, right? You should seek help because your finances aren't in order. Always feel free to reach out. Even if nothing comes of it now, if I set you on the right path in 6 months, 1 year, you can obviously give us a call and go, right, thanks to that, I'm now in the right space. Let's have that conversation. And I think a lot more people need to take that more seriously, stop trying to wing it and reach out and help. Any parting words from you on kind of that subject?
Coming back, sometimes you go to a doctor and doctor says, nothing to worry about, just go off to sleep, take rest, have a cup of coffee and you'll be fine. So similarly, if someone comes to you, nothing to worry about, you're on the right track, come back to me after 6 months, 1 year. So not necessary that every time he has to invest with me, but there is an advice which I'm giving, should be, fine, you're on the right track. My parting words would be to everyone would be, which I follow, always make your future bigger than your past. And I think that's a really good note to end on, to be honest. So thank you very much, Ashok. It's actually been such a pleasure speaking with you and learning from you as well. This has been the Financial Freedom Podcast. Thank you so much, everyone, for listening. Thank you very much.